And next, we got our silver roundtable. Really privileged to be joined by Chen Lin and Peter Krauth for our roundtable discussion, Silver in Focus, Navigating Volatility and Opportunity. Chen, of course, is the editor and publisher of What is Chen Buying, What is Chen Selling, and a full-time fund manager with a strong track record across mining, energy, and technology investing. Peter is the author of the editor Silver Stock Investor and the best-selling book, The Great Silver Bull. Over 20 years experience investing and analyzing silver resource markets. He leverages deep industry network to identify opportunities and is a frequent contributor to leading financial publications and conferences. Both of them have been on my show a couple times. My Kinvestor report, always have a great audience. What I'd like to do with this roundtable is really get the audience involved. So during this conversation, please tap in your questions to ask Chen and Peter directly, and I'll just facilitate because I think they can bring a lot to the table here. Chen and Peter, how are you today?
Great. Thank you, Arlen.
Doing well, Arlen. Always fun to be with you.
Yeah, awesome. Well, Chen, we're going to start with you today. Let's talk about a little bit the debt, inflation, Fed, and interest rates, where we're at, why this benefits silver, and take it from there.
Yes. Recently with this war going on, dragging on, we have an interest rate spike. Actually, I live in the United States, and some of you may not, but actually our mortgage rate is going up. In general, what happened in 2008, in many times when there's a crisis, interest rate drop, people pile into US dollar, right? And then US dollar goes up, interest rate goes down. But this time, US dollar goes up, interest rate goes down, right? Because there's a fear that the United States government spends so much on the war that could head into a little bit of trouble. So our 30-year bond is crossing the 5%. I think that's what the last time Trump talked. Yeah, it's just around that area. So last time I checked, yesterday was around that. So it's very, very tough coming. So the debt of our government, United States, is very, very high. The interest service was getting worse and worse. Trump wanted to lower the interest rate, but this war actually increased the interest rate tremendously. As you can see, you can check on Bloomberg or CNBC. So it's really benefit. I can tell you it's really benefit for gold and silver in the long run. But however, in the short term, as we see war goes on, people sell gold to feed, right? You cannot eat gold, you cannot eat silver. You have to feed your family. Especially true in Dubai, especially true in India, right? In India, we see biggest selling even stronger than COVID because they depend on Middle East oil and gas, and they need to feed themselves. They even don't have fertilizer for the spring plantation. They don't have that. So gold and silver did what it's supposed to do in time of emergency. You use that to buy whatever you need. But as we see, both in 2008 and in 2022, when the Ukraine war happened, they will be very positive for gold and silver in the long run. We are entering this stagflation environment. So gold, I would say you first watch gold bottom, and silver would follow.
Yeah. Okay, that answers that on like a hedge to inflation. Peter, I want to wrap you in on this. So where does silver enter the world with the industrial uses and the new demands for silver for industrial uses? Like, because that's something that's changed dramatically over the last 20 years in the investment cycle or the investment thesis for silver.
Agreed. So, in fact, something that I like to point out in terms of how things have developed just in the last 5 years. I mean, it's been growing, and then it stabilized. But about 5 years ago, up until about 5 years ago, about half of silver demand was for industry, which was pretty substantial in itself. But what we've seen, Arlen, since then is that it has moved from 50% to now about 65 or 67%, which is just unreal. That's up by a full third in 5 years.
Wow.
Yeah, you said it. It's crazy. I mean, we're just finding, silver is not in quantity, but in types of applications, it's the second most used commodity after oil. It has something like 10,000 different applications. It's crazy. So we see it, of course, in electronics because it's highly conductive and it's the best reflector, best conductor of heat as well. So we find it really pretty much everywhere. I like to say that it's never more than about a meter away from us in our smartphones, our screens, our keyboards, you name it, in switches, it's in our computers. And now with data centers, just sort of exploding in terms of growth and demand, you find it in switches, you find it in cooling systems for those data centers. It's really everywhere. And so we're needing more and more of it. So the interesting thing to point out, not only is industrial demand requiring more, but what that does is it squeezes out the available silver for investment demand. So if you think about 5 years ago, where half of silver went to industry, the other half was technically available for investment of some kind. Let's call it silverware, jewelry, and physical coins and bars. Well, if you fast forward to today, and there's 65 or say 67% of it goes to industry, that leaves a third for these other things, investment of some sort, jewelry, silverware again, and coins and bars. So if there's less available for the investment side, what happens? You get a squeeze when investment comes back in a big way. And I think that explains the behavior we saw late last year and into January of this year, when people just felt, it was a FOMO, there was this fear of missing out. Gold had been very strong, very steady, and rising very strongly for the prior 2 years almost. And then silver did what it always does, which is to catch up. And people see gold at, $5,000 or up to 5,600 ultimately, and said, wow, I need some gold, but I'm getting, 1 ounce for that kind of money. What are my alternatives? And there was this big rush on the investment side, and there's less available because, like I say, so much of it is now going towards industry. And if I may, Arlen, just to kind of talk about some of the trends in industry.
Yeah, please.
Yeah. So what I think people really need to the takeaway I think from industry is that the 800-pound gorilla, as I call it, in silver demand from industry is solar, which takes about a fifth of all silver produced every year, which is huge. Like, this one single application goes to just solar panels. And there's been some talk, and I'm not one to stick my head in the sand and say, well, that's not going to change anything. That higher silver prices is going to make solar panels more expensive. There's no question about that. And so there's talk about, perhaps switching to other technologies, looking for ways to thrift even more, which is getting tough at this point. But so we can't discount that. On the flip side, though, solar is still the lowest cost incremental source of energy for utility companies. So, it's a green energy, and so we're still in this green transition where that's being favored, and I think there's a game changer when it comes to batteries, because the big knock against solar has always been that it's not base load power, that it is generating power in the day when there's sun and then not doing so at night. So, areas that require a very steady 24-hour source of power, had challenges with solar. But batteries have come in and really reshaped that whole thing. Batteries are seeing batteries for solar, so to store solar power. The cost of batteries is dropping essentially by half in the next 10 years. And we've seen a big uptake of batteries in the solar industry, which, of course, as your viewers are going to understand, allows solar to be 24-hour power. So you will generate power in the daytime from solar. You can store that in those batteries. And then when nighttime comes, you can draw the power from the batteries. And so you've got your 24-hour source with solar and batteries. So I like to say that really batteries are a game changer, and they're making solar into a base load power source. And we've seen big uptake. I mean, just to give you some quick numbers, the growth of solar over the last decade or into the next decade is going to be about 3% per year. The growth of batteries for solar is going to be about 12% per year. So the battery versus solar matchup, so that there's enough battery capacity to match the solar capacity, is really going gangbusters. And we're already at a point where 2020, in 2025, 60% of installed solar capacity has been met by batteries. So that's really catching up very quickly. And I think that's going to be something to watch.
Yeah. So based on what you said here, you're a little bit more bullish on the silver story because of the industrial demand for it. Chen, to you, you're more of a silver bull because of the inflation hedge, right? A little bit more, or are you a buyer of the industrial demand too as well? Is that part of your entire thesis, Chen?
Well, for the record, I was calling for silver for the past 3 years, and silver reached $100 early this
Well,
year. And on my presentation, when I was presenting, and was proudly wearing a triple-digit silver. But as I said, if you watch my presentation in past 2 years, especially this year, in the past month or two, I'm expecting silver to come in this year, and which it does actually faster than I thought. The gold, silver, because silver is getting a little bit too high. As Peter said very correctly, 65, 67% industrial use. Very high silver actually squeeze the industrial demand. And also, a lot of people invest in silver are investors, and they will sell silver just like Bitcoin. They could, they don't care what it is. They just want to make money. Versus gold, you have central bank buying, right? So I see this. We had a great run of silver, and right now it seems I'm watching. Okay, I'm an investor. I'm investing on family asset. I'm watching gold to bottom. It's about right. I was calling in my newsletter I sold out all my gold and silver future a month ago. I was waiting gold to hit 4,000, silver to hit 50. Gold almost hit 4,000, hit 4,090 on Monday morning before Trump, did his tweak.
Yeah.
So silver is not there yet. I think silver 50 is a long time resistant. They could retest it. It could. I could be wrong because Trump could tweet something tomorrow and we all go up. I'm happy. I'm happy. But my point is, I'm a silver investor for a silver mining company. 50, 60, 70, $80 is very, very good. Most company cost is 20. So you have very, very high margin already. I rather have silver rally to be long rather instead of a very spiky.
Oh
So
yeah.
that's my point. And I expect silver to come in, which it came in. And also very important, on April 1st is a very important time for solar panel, just like Peter said, because after April 1st, China is going to stop rebating the tax rebating solar panel, which is 13% cost increase. So there's a lot of solar panel was pushed forward in Q1 instead of Q2. So a lot of silver demand was front loaded in Q1. That's I explained in my past 2 months in all the different presentations. So I kind of expect, a silver squeeze, tight market first 1 quarter, and then getting a little bit, less in the second quarter.
Yeah. Well, it's actually, I think you were on my show the day silver hit $110+, and we were going like this, yeah, but we were also being prudent. We were also being prudent and telling people that we're taking a tiny bit off the table, right? And then here we are again, where the silver's retraced quite significantly, just because of the macro outlook, I think, and what's happening in the Middle East. Who wants to talk about the gold silver ratio? And is this relevant today anymore? Like the historical average is like 70-1 right now, or like a little bit 60. But is this a relevant ratio anymore? Like I see people talking about it all the time.
Yeah, I can take a little bit, and maybe Peter can correct or add. So a gold-silver ratio valid when is gold and silver are regarded as money. So basically, you need the monetization of silver. Right now, silver it does not. Right, silver used to be monetary metal, not anymore. So the gold-silver ratio is something you talk about. I think it's more significant when we are in the bull market. Right now, we're in the correction phase. So gold silver ratio can be anything. Usually in the correction, gold silver ratio is very high. So, but it's okay. It's a good time to you can buy it on the cheap.
Yeah. Peter, what about you? What do you think about that?
Yeah, I mean, I agree with what Chen says. It's relevant and more so depending on what kind of phase we're in. You're right, Arlen. The longer term, it has shifted upwards. Sort of the long term average. It has been higher in the last few decades. But I think what people need to watch for when we look at the ratio is more. Like it's more useful when it gets to extremes than in my view
Mhm.
than anything else. So if it gets really high or really low, then you need to start paying attention and seeing what it's telling you. So when it's really high, it means that it takes a lot more silver ounces to buy 1 gold ounce, meaning silver's cheap versus gold. And odds are it's a good time to be buying silver versus rather than gold, and vice versa. So when it's very low, it means it takes fewer ounces or many fewer ounces to buy silver versus gold, and you maybe want to buy gold instead of silver. So, that's essentially it in a nutshell. I just feel that depending, as I say, what phase we're in, it can be more or less useful, and I'd watch its extremes more than anything.
I really like that answer, actually. That's a fantastic answer. Thank you,
Thank
Peter.
you.
All right. So this all sounds wonderful, right? It sounds like silver's going to $500 an ounce, whatever numbers we want to throw out there.
It is,
What can go
Arlen.
wrong? Yeah. But like, so what can go wrong? Like I was at the VIRC, the Vancouver Resource Investment Conference, which is a great conference put on by Jay Martin, but it lives in my hometown, Squamish, BC. Um, I was asking people what can go wrong, what can go wrong, what can go wrong. Very few people said nothing. Like, we're sorry, most people said, I can't find anything that could go wrong or anything that could cause this bear market, right? Which is always a warning sign to me.
Right.
And then sure enough, obviously the Trump wild card comes into play and puts a pause on liquidity, puts a pause on the charts, puts a pause on the financing. I almost forget where I'm going with this question. But yeah, what's the bear case for silver? Is
Wow.
there one?
I mean, I'm going to stick my neck out a little bit in here and say it depends on your time frame. If your time frame is sufficiently long, if it's a long term, and honestly, there is, to me, I don't see a bear case. It's more a question of if you're short term or medium term invested, then yes, of course, there can be a bear case. If there's a recession, we do know from research that silver struggles. Gold does relatively well. Silver does better prior to recessions. It does worse right through the middles of a recession, and it does better than gold coming out of recession because if you've got stimulus, which it gets industry and the economy going again, so the consumption goes higher. But honestly, my view is long term. I can't see a bear case. I really can't. Kind of the reasons I talked about before. It's very much like gold. The only sort of perhaps, depending on your point of view, but perhaps strike against silver is because of its industrial demand. And if you go into, I don't know, some kind of a depression, some kind of a long-term depression, um, what will happen in terms of the industrial demand. So, and the emphasis would, of course, be on the monetary or investment demand. For all I know, that could be enough to support silver through that kind of a phase. And if you're in a bad enough recession or even depression, you'd have to think governments are going to be printing like crazy, and then you're going to have this silver being the alternate to gold because it's so much cheaper per ounce that would still drive demand for it. And all of this money printing to try and get the economy going again would be stimulative on the industrial demand side. So these are my reasons, and for not seeing a bear case on a long-term view.
Yeah. I actually, next time somebody asks me that question, I'm going to answer the same way. Depends on what your, it depends what your, depends what your timeline is. Because if you do look at like, the history of gold over the last 25 years, it's like one of the best performing asset classes on the
By
planet,
far,
right?
by
They're like,
far.
so many investors are going, oh my God, how am I going to make money in 2 weeks? How am I going to make money in 6 months? And then they, end up chasing things, selling at the bottom because they don't know, understand what they were buying, right? And that's why they're losing money, right?
Arlen,
Um,
if memory serves me right, and you look at a long-term chart of silver, gold, and the S&P and the Dow, for example, going back to 2000 or so, I believe maybe Chen knows this more specifically than I do, but I'm pretty sure that gold has at the very least doubled the S&P over the last 20 to 25 years. Doubled. You've got probably more volatility, but you've by far outpaced the entire broad market.
Yeah. And that's 25 years of data. Right.
Exactly.
And we all
That's right.
know, and we all learned in high school, I think, that the more data that you have, the more conclusive you can come to the evidence, or the more evidence you concludes your answer. Right.
Exactly.
All right. I'm going to throw that at you, Chen. What's the bear case? Is there one out there?
Yeah, I'm looking for $50 silver this year, and potentially that would be a great buying opportunity because $50 has been strong resistance for decades. We broke that $50 last year, and it's a great run. From 50 we go to 110, as we said. Sometime in the bear case, it will retest the breakout point. That would be a great buying opportunity. I just don't know we will get there.
Mhm.
That's first question. And then second, in the extreme bear case, usually the silver has to drop to some high cost producer, make high cost producer feel pain. That's actually much lower. It's probably at the $20 range. So, but I thought we are in 2008. I think this is more like 2020, right? Like more like Ukraine war. But then people say, Chen, Ukraine war, gold dropped by 9 months. Gold went down 9 months. Okay, Ukraine war was very positive for gold, but gold went down actually very, very long time. But my point is the Iran war will not last for 9 weeks because Trump has the midterm election. So he has to, it could finish this weekend, could finish next weekend. Of course, there's other party don't want that to finish, right? Like one side is Israel, one side is Russia, right? I heard both sides they want the war to fight on, but so we'll see how it goes. And but I think for Trump, for his election, for his presidency, if he doesn't want to be impeached every day. He probably want to finish the war very soon. So that's my take. So I thought it will be 9 months, like a Ukraine war. But Ukraine war was the best for the gold. If you look at the long, just like Peter said, like Arlen said, for the long run, it's very, very positive. But the short term is very painful.
Yeah. Hey, Peter, sorry, Peter, maybe you know this. Can the Canadian government, are they a threat of being impeached ever?
My goodness. In
Oh
the
my God, am
Canadian
I allowed
government,
to,
you know
I'm
what? I'm not I'm not big on
wishful
I'm not
thinking.
well that or on Canadian history. But
Yeah, yeah, yeah.
not that I can remember hearing about. No.
Yeah, it doesn't.
Interestingly enough, I guess
It has to be a vote. I think
we're
it has to
more
be a
low
vote of
key.
has to be a vote of non-confidence within its own
Right,
party. And as if its own party is going to say, oh yeah, we don't
right.
believe in you right now, right? They're all
Exactly.
desperate trying to buy votes, right? So
That's
anyways,
right.
that's enough of Canadian politics. I don't want to get thrown in jail. Okay. So actually I got a few questions again about this is like the use of silver and solar panels. And I know you touched base on this, Peter, and I think you even touched base on this, Chen, a little bit. Who wants to tackle this? Because people are clearly concerned about the media headlines that, silver is going to be replaced by XYZ metal. I don't know
Yeah,
which metal, but
I can cover that a little bit because I know those Chinese manufacturer very well. This year actually going to be the year they're going to switch a lot to copper. My biggest fear actually was because when silver was over 100, my biggest fear was because of tax rebate situation. Every demand got pushed forward by April 1st, which is very soon.
Mhm.
Chinese factory will be shut down and they will be retooling to use less silver for the next generation solar panel. So actually lower silver price is a little bit helpful, frankly. There is a lot of technology coming. There are even solar panel, certain solar panel using HJT technology, they potentially can use non-silver. No silver. There are also other solar panel like what we have First Solar in the United States has used no silver, right? You don't have to use silver, but the problem is the efficiency and durability. How do you sacrifice that? That's a question mark.
Mhm. Yeah. I got a bear case for you, Peter. Maybe you should comment on this. We mine on the moon, and they find some sort of element that is more conductive than silver and can be mined for cheaper than silver and brought back to Earth cheaper than silver and put into the supply chain cheaper than silver. How does that sound?
Sounds great. I'll change my mind when I see it.
Fair enough. Fair enough. Okay, actually, that was I didn't know about that tax rebate thing in China, so that's actually quite interesting. Um, let's talk about silver versus silver stocks. Peter, is there a balance between owning some bullion, owning ETFs, owning junior explorers, developers, and all these wild, crazy things that we play in?
Yeah, I mean, I've said this forever. I say it in my book. I tell my subscriber this, that I think everybody needs to own silver. It comes down to in what form and to what degree. So for the most conservative, that would probably be bullion, and for the highest risk, that would be a pre-discovery, junior silver play. And then there's a lot in between. So you just have to know yourself and know your risk tolerance and then decide what kind of exposure makes sense for me, and to what degree. So frankly, there's a lot in between. You have physically backed silver ETFs, and then you have a mix of physically backed silver ETFs and silver miners. You have just silver miner ETFs, and I'm kind of going through this in sort of the lowest risk to the highest risk. After that, you've got some large royalty companies, you've got large producers, you've got mid-sized producers, you've got developers, you've got junior explorers that have a discovery and perhaps even an economic deposit. And then you've got early stage discoveries, and then you've got pre-discovery junior explorers. So within that huge spectrum, I think people can and should build some kind of a portfolio with exposure to this. What I do want to point out, and I think is very important, this is what I've been saying since the beginning of this year, after we had this crazy run up in the silver price, that I think it's with the miners that we have the next opportunity in the silver space, because um, we have not, I believe, despite some pretty fantastic runs in many silver stocks, we have not seen anything yet. And they have. I'll give you an easy way, perhaps, to view or imagine this. If you look at the SIL ETF, which is silver stocks, mostly silver stocks, and you compare its gains to SLV, or the price of silver. So essentially, silver versus silver stocks. Over the last 5 years, silver has doubled the return of silver stocks. That's not what you take risk for, by owning the higher risk miners. You should be getting
Mhm.
some positive leverage. So you had actually negative leverage 2 to 1. So you were way better off for the last 5 years owning silver. If you look over the last 2 years, you're neck and neck. They've got essentially the same return. So, and that's also not fair reward for the risk. I believe we're entering the period where the silver miners will now far outpace the gains in silver. And one of the big reasons is that we're going to start over the next few quarters seeing silver producers reporting profits with recent quarterly silver price averages that are going to be much higher than they were in the last few years. So to give you some idea, let's say an all-in sustaining cost for an ounce of silver these days is about $20. At a $30 silver price, they're making 33% profit, which is very, very respectable. At $90 silver, which I believe we're going to be
Mhm.
back to pretty soon, or at least in the next few quarters, and we have been recently, we're looking at a 78% profit margin on an all-in sustaining cost of $20. So this huge expansion in profit margins is going to start to show up in quarterly reports, and the market hasn't clued into this yet, and it's going to have to reprice a bunch of these silver producers. There's an interesting, it's not verbatim, but there's a quote I have from Ned Naylor Leland, who runs a $3 billion Jupiter Asset Management gold and silver fund. And he said, um, I'm going to actually preface that a little bit first. If you look at the very small pool of larger cap silver producers, It's a very, very small group, much
Mhm.
smaller than large gold producers. So because of the scarcity, they actually trade at a premium to gold producers. Gold producers trade at about 1.3 times their net asset value. Silver producers trade at about 2.1 times net asset value. Now, if so, here's the interesting quote from Ned at Jupiter. He's saying that you've got silver producers at 2 times NAV. You've got silver developers at 0.2 times NAV. So for a silver developer to go from developer to producer is a 10x. We have not even
Yeah,
talked
yeah.
about we have not even talked
Well,
about what the juniors can do. So
but who are the developers going into production that is actually like primary silver production? And how many of these silver producers are actually reporting a silver equivalent as their primary source of revenue? Yet it's really a mix between a byproduct and the copper and the gold, whatever it is, right? Like
right,
the marketing genius move of the an entire world in gold was when Wheaton River started saying, "Hey, this is our gold equivalent ounces," right? Like that was genius.
yep.
And now, so many companies have followed through with that, right? So, yeah, there's not a lot of primary silver producers out
No.
there. Like, who are they?
My goodness. I mean, you've got, if we're talking on a larger market cap, we've got Kerr Mining, we've got Pan American Silver, we've got Hecla, we've got First Majestic. And I mean, honestly, that's about it in terms of larger producers, a handful, 4 or 5 of them. And then you quickly fall to, sort of mid-tier names, companies like Aya Gold and Silver. You've got, frankly, in the silver space, I can't think of anybody that you've got just smaller producers. You've got companies like Avino, for example. You've
Hmm.
got Santa Cruz. These are you've got America's Gold and Silver, and so these are sort of these sort of smaller, mid-sized companies that I believe are going to grow pretty significantly, and the names I've suggested have some fantastic growth profiles, but exactly to your point, it's a very tiny space. And frankly, I believe it deserves that scarcity premium. And yeah, there's a lot of margin expansion coming
Yeah.
up.
What happens in that scarcity premium, though, is when the generalists are demanded to own XYZ% of the portfolio into silver stocks, there's only 4 or 5 names to go after.
Exactly.
Enough said. Okay, Chen, we
Yes.
got a few minutes. We got a few minutes left. When do us as like human beings, when does the impact of $50 silver start affecting our wallets? Like the price of an iPhone, the price of a TV, the price of all these luxuries that we take for granted in our day-to-day life.
Oh, very
Like,
little. I mean, they use a
okay.
tiny little bit of silver. I don't think there's too much inflation on that. The pressure, I think $50 maybe okay. $100 will put pressure on solar panel. Again, there's a substitute, but again, it's you need a juggling around that. Silver is getting expensive. So yeah, not too much, and I don't see that. And also, just to add to Peter was that the core, which is my key holding, they only 30%. They just took over New Gold, right?
Yeah, I saw that.
They have a gold and copper mine now. There's 30%, maybe less than
Yeah.
30% silver. My prediction is Core will buy a silver project this year to keep themselves more in the silver
To like a
camp.
primary to be a primary silver
Yeah,
play.
yeah, more. But they have 2 billion free cash flow. They just
Oh, did you
announced
see their
750 million cash buyback, share
Oh, I know. I
buyback. It's
saw that yesterday. I
unbelievable.
was like, what? Those
Yeah,
numbers are
wow.
like
Yeah, yeah. They have
phenomenal.
so
Yeah,
much
yeah.
cash. Yeah,
So much
yeah,
cash, dripping with cash.
yeah.
So you're saying like maybe like $100 silver kind of is maybe the price range where like high prices fix high prices potentially?
Yes, I said I think at the critical metal, silver probably between $50 to $100. And that if you want the sustainable above $100 need to be monetized. People start to monetize silver if we saw India make a move, Russia make a move. Let's see whether China will be big elephant if China monetize silver. Then we'll have a triple digit silver. Peter will be very, very happy. Sky will be the limit. But until then, I think if you just use, silver as the critical metal, as one of the critical metal, which is announced last year by both United States and China, 50 to 100 is fair because you look at all the silver mining companies, they're making a lot of money. All the mines are going production. We can see that a lot of new project going production at this price. So there's a lot of supply coming.
Yeah, yeah. I got a silly question here. So the day that silver hit like 110 bucks plus, I wanted to go sell a little bit of my physical bullion just so I could say I got it, right? And the lineup was around the block to like the bullion. So my question, are those people selling, do you think? Or do you think that they're trying to buy?
Now, I sold silver future at $100. Just want to make my
Yeah.
point. Okay, I sold some of my old silver collection at $100. I still keep a lot. I think eventually will go up, and also goes up with inflation. With the mining costs always go up. I think it's a good collection. Put it this way, I only sold my least favorite silver collection at $100.
Arlen, what I would say is that, kind of like I said earlier, it depends, and it depends on where that lineup is. Is that if that lineup is in the West, I can tell you that bullion dealers in the West have been telling me they're buying more than they're selling. So those people waiting in line, on average, are selling to them. But in the East, it's the total opposite. People are in
Interesting.
line to buy, and they can't get enough. And some bullion dealers have been adding staff. They are limiting the size of orders to a certain minimum because they don't want to deal with a whole bunch of small orders. They are staffing to 24 hours, and it had gotten wild. It's probably, I'm sure it has, cooled off a little bit since then, but the East is buying, the West has been selling to a fair degree.
Yeah, I
Has
concur. There's a accumulation actually of silver recently in the China. Silver has been
Yeah,
flowing to China recently,
yeah,
because it's deep, right? Because all these
exactly.
silver solar panel producers, they were dying to have silver coming down. Their silver is $100, gave
That's
them a
right.
heart attack, right? So
Exactly.
70, 60 is for them it's a bargain.
I
The
gotta tell you,
East,
I love
they're,
collecting my silver coins because they're pretty. They come with all these cool designs and they're shiny and they feel good in your hand.
you
It's
bet.
just fun to collect that. Um, oh man, I had one more big question here before we have to wrap this up here. And I think I'm gonna run out of time for it, to be quite honest. Guys, thank you so much. What an entertaining conversation. What a time to be alive. Really appreciate both of your participation in this. We'll make sure that we put more information on both your newsletter writers in this channel. I really want to thank Investing News Network to INN as well, for being sponsoring this panel today. They've been a huge part of the success of this conference. So yeah, thanks everybody for that. And we'll stay tuned for our next presentation from Silver 47.
Okay, one of my favorites. Thank you, Arlene.
Me
Yeah,
too.
yeah,
Thanks,
awesome. Thank
Arlen.
you.